Welcome to Coin Toss, the show where we respectfully and often vehemently debate the big questions within our modern, financialized, and increasingly tokenized world. I'm Christine Lee, anchor at CoinDesk TV and your moderator. The conversation today focuses on Bitcoin and Ethereum, the pros, the cons, and which will dominate in the long term. Bitcoin is the first cryptocurrency invented by a faceless, pseudonymous creator. Its security, supported by a distributed, decentralized ledger running on over 80,000 nodes around the world, is deemed to be unhackable, the original, unstoppable honey badger. Its 21 million fixed supply ensures that as demand increases, the value of Bitcoin goes up. In its 12-year run, BTC has grown to a market capitalization of over $660 billion right now, making it the dominant cryptocurrency in the market. But its dominance over other cryptocurrencies has been shrinking from a high of over 70% in December to about 40% today. Whispers of a flippening are beginning to re-emerge. That is a hypothetical event in the future when a rising cryptocurrency's market cap, namely Ethereum, surpasses that of Bitcoin. Ethereum was conceived by Russian-Canadian Vitalik Buterin, a Bitcoiner who dreamt of a digital asset that could be more than digital cash, but digitize everything. An infinite machine, a universe computer for all if this then that transactions, or smart contracts. It has spawned whole industries ranging from decentralized finance to decentralized autonomous organizations to digital collectibles with the recent NFT craze. Ether is the second largest cryptocurrency by market cap at almost 300 billion. In May, Ether's record price rally triggered a flurry of activity in the options market, driving the cryptocurrency to flip Bitcoin in terms of trading volumes for the first time. ETH is up 240% year to date, while Bitcoin is up 20%. And with all that said, let's dig into today's topic. Joining me for today's discussion are Bruce Fenton, Managing Director of broker-dealer WatchDog Capital and CEO and founder of Chainstone Labs, a holding company for financial firms. After spending 2 decades on Wall Street as a stockbroker, Bruce walked away from his fiat job to take a leap of faith into Bitcoin. In 2015, he briefly led the Bitcoin Foundation, a nonprofit Bitcoin advocacy group, and created the Satoshi Roundtable, an invite-only annual gathering of Bitcoin OGs. And also joining us is David Hoffman, co-founder of Bankless, a content studio with a newsletter, podcast, and YouTube channel focused on education on how to live a life without banks. Welcome, David and Bruce, to the show.
Thank you.
Thank you.
Good to have you. And you both have contributed articles to CoinDesk. So thank you very much. All right. So Bruce, many assume you are a Bitcoin maximalist, a belief that there can only be one cryptocurrency, one coin to rule them all, as they say. But if I remember correctly, from one of your talks, you actually said you're protocol neutral and you created Raven Coin, so you can't be a maximalist. Where do you stand?
Well, I didn't really create it, but I'm a Bitcoin monetary maximalist. I think Bitcoin's the best money, but I definitely think that there are other digital assets that have value, and I like other protocols. A lot of people don't know that I'm a big Ethereum fan. I was in the Ethereum crowd sale. I'm happy with that investment, and I'm happy with Ethereum. And I think Ethereum has done a lot on one of the areas that I'm most interested in, which is security. Ethereum has the biggest lead for securities tokens. I think Bitcoin is my favorite chain. I'd like to see more of that kind of second layer building on Bitcoin, but I'm not somebody who believes in only one asset. I think that the world is more complex and nuanced than that.
And David, where do you stand? Are you protocol neutral? Are you open to the cryptocurrencies, or are you all about ETH and a one coiner, as they say?
I'm definitely not a one coiner, but I definitely do ascribe to what Bitcoiners also similarly ascribe to, which is kind of just a convergence on a handful of winners, not a single winner. The beautiful thing about Ethereum is that it's an expressive layer, and you can put many, many, many assets on top of Ethereum. And I think the ability to do that actually kind of sucks the wind out of the rest of the ecosystem, kind of what we saw in 2017, which is to like produce a blockchain for everything, right? And one of the whole points about Ethereum is that you don't need to build your own blockchain. You can just build on the Ethereum app layer. Or if you do want your own blockchain, you can just build on an Ethereum layer 2. And so a lot of these reasons to have, Litecoin, Dogecoin, like Cosmos, Polkadot, is like, well, you can actually just kind of use the Ethereum app layer and achieve the same properties that you want. And you don't actually have to worry about the really hard problem of crypto, which is blockchain security. That's what Ethereum and proof of stake takes care of for you. And so because it does that service for you, we can kind of see things as maybe a Pareto distribution, really just converging upon a handful of winners. And I do believe that Ethereum is going to be in that number one spot.
All right. Well, gentlemen, I'd like to divide our discussion between technology and investment. So let's start off with technology. So Bruce, let's kick things off with Bitcoin. What key technical features are unique to Bitcoin that make it a standout and differentiates itself from other cryptocurrencies out there?
One of the key things is the way that it was founded and the way it was created. You have kind of this immaculate conception, sort of. Nobody really knew. And Ethereum actually has a little bit of that as well, because Ethereum was a sort of one-time thing. When it was launched, it was very unusual. It didn't go on the market right away. It gets criticism sometimes for having what we would call an ICO, sort of, but it was a very, very different time. It was an experiment, and there was definitely not even any guarantee there would ever even be a chain, let alone a token, and let alone something that would trade on this. But the strength of Bitcoin is that its creation made it so that it was a very fair launch. That's very, very very difficult to duplicate. You had code given away for free, and the only people that knew about it were at first a very, very small niche group of people, and then that grew, and that's given it a head start and a network effect that has, more importantly, caused a lot of people to work on the security of it. So I think it's a very, very, very secure chain, and there's a lot of eyes. There's over 800 contributors to the code, and there's thousands more that look at the code very, very carefully. It's probably the most looked at piece of code from a security standpoint. And most of the work on Bitcoin is all very security focused. That's sort of the number one thing that I hear when I'm talking to Bitcoin developers. That's the number one concern. So I think those are some of the things that I like about Bitcoin.
Mm-hmm. David, some of the things Bruce mentions: fair launch, more security. Perhaps comment on that and explain how Ethereum differentiates itself, or maybe improves upon itself in other ways.
Yeah, absolutely. And first and foremost, let me apologize for my background. I'm about to be moving apartments at the end of tomorrow, so it's a little bit hectic. There are some very similar commitments that Ethereum makes that Bitcoiners often talk about positively about Bitcoin, right? And that genesis event for Bitcoin is really, really important to the narrative, like this immaculate conception where we had this benevolent founder that stepped away from the protocol as soon as possible and kind of let it go. And that's really, really good for money. And I agree that that's a very, very compelling story. And you see a lot of those same properties, even though there's a certain cohort of Bitcoin maximalists that wouldn't agree with this, but there's a certain level of very similar properties about the way that the Ethereum blockchain first got started. The ICOs have been tainted, and there's a lot of negative talk about the Ethereum like pre-sale, which kind of illustrates that some people got into Ethereum before others, and that kind of disqualifies it as a money. But if you look at the data and just kind of look at the analysis, specifically the Gini coefficient, which is how Ether is distributed just amongst like an organic kind of scale of centralization to decentralization of the asset, after the presale, it was actually only a little bit more centralized as an asset distribution than Bitcoin. And even after since then, the Gini coefficient has only been improving in a more equitable distribution of the Ether. And the presale as a mechanism was a really great way to have instantaneous distribution amongst a very wide set of people. And it was a permissionless sale event. And so kind of just in the way that Bruce was saying, where the code was given away for free and allowed to anyone to mine the blockchain and receive their Bitcoins, Ethereum had this bootstrapping event that put a ton of Ether into the hands of a lot of people at the very beginning. And then we've also had this like 6-year proof of work phase for even further Ether distribution. And that proof of work phase and that distribution phase is really, really nice when Ethereum moves to proof of stake. And all of a sudden we have this very distributed supply of who holds Ether as we turn into proof of stake. And the compelling thing about proof of stake is that, with Bitcoin mining, it converges upon, very central economies of scale. I cannot be a Bitcoin miner as an individual. I have to have a multi-million-dollar facility. Like, I won't be able to ever like participate in Bitcoin consensus validation because of the nature of proof of work. But with proof of stake, I'm going to run my own node inside of my own house and be part of the cohort of people that actually validates the blockchain. And as we relate that to what the future of money is, the future of money is participatory. It is something that everyone can touch. And a lot of that early fairness that Bitcoin maximalists really, really like to talk about Bitcoin, I actually see becoming more and more true by the nature of Ethereum and proof of stake, and also layer one scaling.
David, I would just want to actually pull up a tweet of yours. You tweet that the Bitcoin argument that proof of work is good for distribution is also saying miner sell pressure is good for Bitcoin. Perhaps you can explain a bit about what you mean there.
Right. So some cohort of Bitcoin maximalists like to call Bitcoin number go up technology, as in it's destined to only go up in price. And then they also say that, proof of work, in contrast to proof of stake, miners, when they mine Bitcoin, they have to sell it because they have costs and expenditures. And that's just the nature of proof of work. It's a rat race to consume as much electricity as possible. But that's also saying that baked into Bitcoin is this daily sell pressure of BTC, the asset, on the secondary market, which inevitably every single day suppresses the price just a meaningful amount. And it was funny. Both communities, both the Ethereum communities and the Bitcoin community, saw this tweet and they were like, thumbs up, yes, agree. And it's interesting to see the way that it lands. It kind of speaks to like the different dispositions of people that kind of fall in these different communities. When I talk about proof of stake and specifically EIP 1559, proof of stake is inherently an issuance reduction mechanism. The minimum amount of Ether needs to be issued, and since it's a non-consumptive security mechanism, the stakers don't have to sell. They don't have any costs. And so when we want to talk about like what is number go up technology, it's a system that doesn't force you to sell your assets, and it allows you to express a very long belief in the network and the asset itself. And without those electricity costs, and with the very wide decentralization, because every individual can stake on their own home laptop, all of a sudden the issuance or the seniorage that a lot of Bitcoin maximalists don't like at all, it's, in my mind, it's okay because everyone has access to it. Not the Federal Reserve or not government insiders can cancel on insiders, but issuance goes across the world wherever there is internet, and that's where Ether and proof of stake becomes extremely equitable in my mind.
Bruce, I'm going to let you jump in on that conversation, proof of stake versus proof of work. Obviously, Bitcoiners want to stick to the original code and keep it proof of work, and otherwise it would change. I would like to get your thoughts on, some of the criticism, which is that proof of work is costly. It's not energy efficient and compared to the other alternatives out there.
Yeah, I mean, the name kind of says it all. It's proving work. And most of the valuable things in the world, whether it's art or building a building or having a great physique, they take work. And Bitcoin proves that the work has been done. Now, doing work doesn't always make something valuable, but most things that are valuable do have work. And with Bitcoin, it is hard work. It's hard work in the sense that it costs money, real money, and a real energy resource. I mean, basically oil. You're taking decomposed dinosaur bones, essentially, and turning them into these things called Bitcoin. And that's expensive. You have to burn energy. And it's certainly not ideal. I wish there was a way to have the same level of security without that. I'm skeptical that proof of stake will be able to do that. I think there may be some other uses for proof of stake, things that don't have the same security needs. But I think that as far as security goes, it's hard to beat proof of work because you're proving that limited coins, and so that's something I think is worth considering about proof of work. It's not perfect, but I think it's the best we have that I've seen so far.
So you're basically saying it's a necessary evil, as it were, in order to ensure the security of the network.
I wouldn't call it an evil, but I think it's the best system that we have. I mean, the real evil is fiat, and that system uses far more oil. I mean, you think Bitcoin mining is bad. Wait till you see how much it costs to have troops bombing brown people all over the world for 2 decades in Afghanistan. An Abrams tank burns 5 gallons of oil, jet fuel. They actually use jet fuel. It burns 5 gallons a minute. So, it's not evil, and it's certainly better than the status quo, which is an extremely evil system that not only burns way more energy, but the fiat system has left 300 million people dead over the last 100 years, killed by their own governments. So it's absolute evil that we're fighting. And if the price of that is burning oil, especially excess energy, in many cases, especially now, it's almost all excess energy that's being used. So I think overall that's a real positive.
So, Bruce, you touched on this earlier. Bitcoin has no leader, and it has allowed the community to create a free narrative however they want. And it's taken on this very libertarian community, sometimes often carnivore. It's really interesting to me, just the how it has created a culture unto itself. But it has also created a lot of drama with SegWit, the argument between small blocks and big blocks, and even Taproot is something that everyone agrees upon, but can't agree on little things like when do we activate it. And so without a leader, does that make it a little slow, a little clunky compared to other cryptocurrencies?
Yeah, the ultimate would be to have a perfect leader who's benign and flawless. To have whether you're religious or not, some sort of religious-like figure who is flawless. That would be the perfect leader, a benign dictator who could just make all of the right decisions all the time and do it very fast.
That sounds like Vitalik, a benign dictator.
Well, I like Vitalik a lot, and I've known him since he was 16 years old working at Bitcoin Magazine. But he is a flawed human, just like I am and everyone else. There is no perfect human, and there is no benign dictator in the world. No one is going. It's fantasy to hope that you would have the perfect benign dictator making decisions. So barring that, then I think that the system that we have, where it is slow and as you said, clunky, that is a security feature. That's a feature, not a bug. It's supposed to be hard, because I signed up to Bitcoin because for one thing, I like the 21 million coin limit. That was one of the very, very first things I said, oh, cool, limited supply. Way, way, way back years ago, that was one of the first things that I was interested in. And I want to sign up for those kind of rules, and I don't want somebody to change it to 22 coins. So that's the benefit of not having a leader. Changing it to 22 million is out of the question. As you said, even tiny changes like Taproot that most people kind of agree on are very, very hard. And that's good, because in a world of uncertainty where you have bureaucrats and authoritarians who sit in fancy marble offices and whimsically decide how much money we should have and how much money should be in the world and whose businesses should survive and die, we have this predictable, certain code that every 10 minutes we know exactly what it says, because we have all agreed to be on that network and we know what the rules are. And that's powerful, and it should be very, very difficult to change. I think that's a feature. And there's different projects that don't have that feature, and they make different trade-offs. There's something to be said for innovation and changing and trying and move fast and break things as well. That's how you learn, and that's what open source is all about, but it's not as secure.
David, Bruce brings up the 21 supply, whereas Ethereum doesn't have a fixed supply. A lot of this relies on the Ethereum Foundation, which is led by Vitalik, who some might say he's a benign dictator, or a benevolent leader, but that may not be the case in the future. What do you say to those who are concerned about the lack of a cap on supply with Ethereum, and that it could have this potentially inflationary event in the future?
Yeah, I also would say that the whole Vitalik is a benign dictator is a pretty outdated mental model for Vitalik's role in this space. He's actually a pretty passive individual, kind of just being more of a spiritual leader, if you will, kind of maybe guiding people based on ethos and values about how Ethereum should be developed. But really, the development has really been handed over to the client teams and coordinators like Danny Ryan and Justin Drake. And really, the EF it kind of funds research and development, but has really been hands off about the direction of the Ethereum protocol. as it relates to the supply cap of Bitcoin, the supply cap of Bitcoin is a great like marketing tool. Bruce said that's why he got into Bitcoin, and it's something that a lot of Austrian economists really enjoy, and it really, that supply cap really kind of triggers that scarcity game, right? It's like, well, if there's a supply cap, if I get my hands on some, then like I'll have some forever and I won't be diluted, and that's really beneficial. The thing that I'm concerned about is I actually think that's kind of skeuomorphic. That is kind of putting Stone Age economics, like literally mimicking gold, like a shiny rock, and like let's mimic the properties of gold and put it on the internet with internet gold, and that's basically what Bitcoin is. And the difference about gold is that gold doesn't take a multi-billion-dollar network that spends like millions and millions of dollars in electricity costs every single year to make sure the gold atoms stay gold atoms. Gold atoms stay as gold atoms because of a supernova, and they don't have any more future security costs down the line, whereas Bitcoin expends millions of dollars every single day in order to keep itself afloat. And the issue with the supply cap is that fundamentally, Bitcoin is costly to maintain because of proof of work by definition. That's the whole point. And then it has a supply cap, which means its security budget for paying for that proof of work dwindles over time. And we have to remember, like, these are crypto economic systems. They need to be secure because the whole point of them is that they are internet native and immune from nation state or large corporation attack. And so we really need to pay attention to our security budget. And so, Ethereum doesn't commit to the supply cap because it needs to, its number one job is to make sure that the Ethereum blockchain is as secure as possible. And that's also the same reasons why we're doing proof of stake in EIP 1559 is they contribute to security. The thing about Ethereum is it doesn't commit to a supply cap because it wants security, but the benefit of being able to issue Ether also gives its own tailwinds with future Ether scarcity because of the application layer. And the application layer on Ethereum is something that Bitcoin just doesn't have, and it generates a ton of economic activity. This is why we see Ethereum, somewhere between 2 and 10x Bitcoin fees on a daily basis. And with EIP 1559, those fees are recaptured and delete the Ether supply. So we have Ether issuance on proof of stake to fundamentally make the blockchain.
Gas fees really high right now, David. How do a lot of developers are really concerned and frustrated with the amount of gas fees being on. So how do you address that?
Right. So gas fees, it's a double-edged sword. We want them to be high because that is blockchain security. If you have high gas fees, you have high security budgets. You have more funding available to make sure that you have high security. If you have high security, you don't have to issue as much Ether. And so that's where like the supply cap, Ether doesn't have a supply cap, but because it has high fees, it actually can lower issuance and potentially lower it to below to negative, right? We're actually reclaiming more Ether than we are issuing. The user experience and the developer experience, as you cited, is a negative of the high fees. But that's where layer 2s come into play. And we have Polygon that released a couple months ago. We have Arbitrum that released last week. And these layer 2s commit to the security of Ethereum, and things like optimistic rollups like Arbitrum and Optimism, they have the same exact security of Ethereum, but they have a level of performance that you would find inside of your Coinbase app or your Robinhood app. And this has been the Ethereum plan to scale this entire time. And so what ultimately ends up happening is that Ethereum, the base blockchain, ends up just being this big shipping container, like traffic control mechanism, ferrying value between all the different L2s, where it's likely that people and users and developers will actually spend most of their time where there's low fees. And because there's so much transactional activity happening on the L2s, the base blockchain gets its fees from bundling up a large number of transactions and shuffling them around from different L2s. And that's kind of been the long-term vision of Ethereum for a while now. And so ultimately, the high fees on the base layer are going to be paid shared expenses by hundreds or thousands of different participants, and so the fees will be low on an individual basis, but they will be high on a network basis because Ethereum can scale and it has an application layer, and all of this ultimately goes to the reduction of supply of Ether. And like I said with Bitcoin in that 21 million hard cap scarcity game, Ethereum also has this scarcity game of like, well, if all of the world's economic activity comes onto Ethereum, all of that economic activity is burning Ether. And all of a sudden there's that same scarcity game. Then I think that's even stronger.
Okay, interesting. I want to bring up, give Bruce a chance to respond and bring up this tweet I saw him make a couple of years ago, actually. I love Bitcoin. It's my biggest holding, and I hope it becomes the global reserve currency. But Bruce, one of the biggest criticisms for Bitcoin is that it isn't really usable for its intended purpose, which is a peer-to-peer electronic cash system. Is that a concern for you, or do you disagree with that?
Yeah, it's a concern. I wish there was a way to have the scaling without. I wish we could have raised the block size to 10 by 10x and not had any drawbacks with that or security issues. I think that to my point there, that's a pretty old tweet, but the world is nuanced, and when I was looking at the invite for this, it seemed like kind of a Bitcoin versus Ethereum debate. So anybody expecting that might be disappointed. I think the world is more nuanced than just saying, it's only Bitcoin, or, kind of like I said, of whatever that was a few years ago. The world is a very nuanced place. There's a lot of different needs and a lot of different security needs and different preferences. Some people like silver, some people like gold, some people might like Litecoin. The existence of these things and the popularity. I tweeted a long time ago. I said, if Ethereum's so bad, how come so many people use it? And some of the Bitcoiners got a kick out of that, and the Ethereum people seem to like that. But that's the point. The world is a big place, and there's room for a lot of different things out there. And I try and be open-minded, because I think that anybody who's been in this space knows that it's very volatile and we can't know what's going to happen. I don't know how the world will unfold, but I think that the overall properties of Bitcoin make it better, the best money right now.
Right. David brought up a lot of use cases for Ethereum as people build on that layer one. We're seeing with decentralized finance, NFTs, those markets exploding, the community really growing and having all sorts of use cases out there. How will people build on Bitcoin, Bruce?
There's been some efforts on it. It has been much slower than Ethereum, to be, just totally frank about it. Ethereum has just crushed it on the second layer. That's just a fact. There's a lot more tokens. A lot of people don't care about tokens, especially a lot of Bitcoiners. So they don't view that as a plus. I do I actually don't like most of the tokens. I'm not impressed by, generally the DeFi tokens and the governance tokens, but I love the idea of tokens in general, mainly for securities. Securities is the mother of all industries. It's deca trillions, and that's a cornerstone of all global economics. So if you can make securities work better, then you can make the world work better. And so far, if you were going to issue a security token, most people would probably be driven towards Ethereum. I've been focusing on Bitcoin, so our company signed up to the Liquid network. We support RSK, I support RBG, I support anything that builds on Bitcoin, but Ethereum has done a great job at that, and that can't be denied, because Ethereum has welcomed builders and developers. And I think that's something that would be great for Bitcoin. As far as the reason that I prefer Bitcoin, one of the reasons is the DAO hack. Some time back, there was I shouldn't say hack. It was actually an attack. It wasn't really a hack. It was just kind of somebody taking advantage of the code. So it was an attack that put money in a wallet that the creators didn't intend, and then it was rolled back and changed. And I think that was a mistake. Now, to be fair, as David mentioned, and I agree with what he said about Vitalik, you don't really have this benign dictator kind of situation. And I think it would be much, much harder for the DAO hack to a DAO attack to cause a rollback of Ethereum again. But it was a bad precedent. And I think if there was something really, really, really significant, one of these huge protocols, these deca-billion-dollar protocols that have lots of Ethereum, if there was a problem with that, I don't think it's out of the question. It may not be out of the question either for Bitcoin, but I think it's much, 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 much harder to do, a fork or a rollback or something like that. So, I have a belief that you want to build on the most solid chain with those rules that you can always depend on. That there's no important people who can come in and change it. So, I'd like to see more building on Bitcoin. Mm-hmm. In a perfect world, I'd love to see all of the innovation and the building and the excitement that you see. And it's also a different culture. Mm-hmm. I've spent a lot of time in both, and there's great feelings about both. I think there's more signal to noise in Bitcoin, but there's also more excitement and building and experimenting in Ethereum. So I and by the way, on this topic, just real quickly, we didn't used to always be like this. We used to be sort of one community. Vitalik was a Bitcoiner, and I don't really like the some of the narrative that came out of the conference, sort of toxicity versus altcoins and stuff like that. I think there's more that we can do to cooperate, and I'd like to see more of the. I'd like to see Bitcoin learn more from Ethereum on the embracing of new ideas and experimenting.
No, I totally agree. Yeah, that was a terrible comment made out there about toxicity and applauding that. But nevertheless, we got to wrap, but I really want to fit in this one last question, which is the flippening, this hypothetical event in the future that may happen where Ethereum surpasses Bitcoin in market cap. Do you think that'll happen, David?
Yeah, eventually. I don't know when, but I don't know how, but we are on a new frontier of crypto economics, and Bitcoin is a part of this crypto economic revolution. It is not the crypto economic revolution, and the system that comes out with the best crypto economics is going to be the number one asset, and I think that's Ether. Bruce talked about tokens on Ethereum and being bearish about tokens and perhaps bullish about security tokens. And again, I just think that's porting the old world onto this straight up new paradigm. And all of the tokens on Ethereum that are the highest market cap are like putting revenue in the hands of the owners. And so investing in the app layer, and which is going to be a new frontier, or the last unallocated asset class, is only going to put tailwinds behind Ether, the currency, and kind of show the world that this is the future of crypto economics.
David, I'm just going to have to cut you. Bruce, could you perhaps respond quickly? A flippening, do you think it'll happen?
I'd be the first to congratulate Ethereum and say great, but I think long term the security model of Bitcoin will win out, and I think if there was a flippening, I think it would reverse at the future. But who knows?
All right. Thank you so much, folks. Thank you very much, Bruce and David, for joining me. That's all the time we have for this episode of Coin Toss, but thank you very much for joining us again. And you can tune in every Wednesday at 10:30 a.m. Eastern, 7:30 a.m. Pacific for new debates with reasonable people digging into the big issues of our increasingly tokenized world. Coming up, I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. I'm Christine Lee. Until next week, keep the conversation going.